Good afternoon. Peter Klein, co-founder, chief investment officer, Aligned Wealth. Here with you today to discuss an interesting growth-minded opportunity for investors to consider, the case for innovation and the fourth industrial revolution. So real interesting stuff, and allow me to share my screen and we will get started. As you can see, there are opportunities. This is the first three industrial revolutions, folks, right? So let's go back to the 1760s to the 1840s. Over those 80 years or so, we saw railroads, canals, steam engine, cotton gin. So we had that industrialization from an agrarian society to an industrial society starting back then. And then in the late 19th century to the early 20th century, the second industrial revolution, communication with telephone and telegraph. We had some technology with anesthesia, antibiotics after Civil War, more like 1900. Assembly lines, Henry Ford and the assembly line, and of course, air flight and the like. So that was the second. And currently we're in the third, which is, of course, digital media, personal computers, semiconductors, internet, and the like. We're entering what we think is the fourth industrial revolution. And of course, we're not the one, we didn't coin that term, as many folks speaking about it, not just us. But what we're thinking is this fourth industrial revolution has some interesting takeaways. Connectivity. So you have the infrastructure, you have the 5G, you have the Internet of Things. You have display technologies, which are becoming very important with the certain types of chips that allow certain types of displays on computer screens and the like. We have the analysis of data, a massive amount of data, unbelievable amount of data that's being analyzed and using techniques like artificial intelligence to determine algorithms from that data. And then, of course, we have technologies that are interfacing with the consumer in a faster, more efficient way. We believe that is the next industrial revolution. Machine learning, AI, sensors, IoT. We've spoken about this before. We really think we're on the cusps of some strong growth going forward. So let's unpack it. The case for specialized technology. So here we have this shows you the dearth of high growth companies, and this scarcity value is why we're seeing companies of a high growth sense, a high growth value, become more valuable, right? When you have more growth and very few companies have that kind of 8% in this case or more growth, that provides opportunities for investors to find those companies. Now, again, we have to be mindful of the risks. We have to be mindful of the valuations. We don't want to pay astronomical prices for these companies, but in many cases, we can find interesting high growth companies that might be on sale. And that's where we want to focus. And they don't happen often. You have to be actively managed to do this. You can't do this through a passive program. This shows you the companies that have, and mostly are US-based companies, less capital intensive. They're using patents. They're using their particular technology enhancements to power their businesses. No longer are they having to have a massive, plant and equipment and a capital intensive warehouse and such to be able to do this. A lot of it is doing it with just the knowledge workers and the knowledge of their particular industry and business that moves it forward. That's important because it's not going to screen the same way it used to screen, right? You're not going to be able to find these companies by looking at high asset levels. You need to be able to find companies that have high growth with low assets, and that's called asset intensity. E-commerce domination. We've seen this growth trend continually going higher. It's amazing to me. And again, COVID has brought 3 years, as they say, 3 years worth of this growth forward. So a lot of the e-commerce growth has been pushed forward because of the pandemic, And we see that as an opportunity to look at some of these companies and say, well, they're not going to go backwards, right? Again, we have to be mindful of the costs to get in, right? The valuation, that's an important piece. Always, to us here at Align, we want to be focused on making sure we're not overpaying, but there are opportunities to look at. Here's a slide that speaks to artificial intelligence, 28% CAGR for the next 3 years, 4 years, huge. And so there's going to be a lot more focus on AI. I'm involved in a venture capital fund out of Caltech that are exploring these explosive growth opportunities. Real interesting stuff, and really, it's usable in current time. It's not so far-fetched. In many of these cases, they're putting this data and this technology to work near term. This is a slide that speaks to the Internet of Things. You may remember that we've spoken about the Internet of Things over the years. It's an exciting area of the intersection of both sensors and AI. Here's a screenshot of 5G, and we see how the reduction in latency, the increase in communication time. It's going to be amazing for industrial applications as well. So as the 5G, and there's many companies that we could look at in this sector to affect this trend. But as there is more, as the 5G becomes more rolled out and more prominent, we're going to see many companies benefit from that. And that's an innovation that we're going to probably see many opportunities come from going forward. And this shows you a little bit of the history of 5G and the speed of launch versus the other communication standards over the years. Applications into the future. What does all this mean? Well, we've talked in the past, and I urge you to listen to our discussion about healthcare and technology, but drug discovery, right, is a major part of what machine learning can help us with. Robotics, drone delivery, that's that last mile delivery, which reduces carbon footprint, right? So we're talking about, we're even teaching machines how to learn, right? And so what does that mean? What can come from that? And there's many different areas that can be takeaways, and many different business opportunities that are takeaways from this machine learning opportunity. One of them, of course, is the 5G in warehouses and autonomous vehicles and robotics doing the work. Now, there's also another side of that, and that other side is displacement of workers, and how do we sort of square that circle, and what does that mean to the economy? And we have to think about that, and that's why companies that are training students in high school and college to become data scientists, that's going to be something that in the future where we're going to need more and more of those. Here's a slide that speaks to the connected economy, and you could see how many factories, stores, all going around this cycle of connectivity. And we see that in so many different ways today. You search on something on Google, the next minute you see an ad for it while you're reading the newspaper online. And so it's really interesting how this sort of idea of connectivity and the idea of machine learning has driven so much in the way of revenues and growth. There are some strong market underpinnings when we look at technology in the fourth industrial revolution. Let's look at the tech sector is certainly surprisingly less volatile than one might think. We use the word or the term beta to have the correlation with the with the market indices, right? So if something's got a 1.0 beta, that means it is as volatile as the index would be, right? The index goes up 5 or 10 or moves like this, so would a 1 beta security or portfolio, more likely. However, if you have a higher beta security or portfolio, you're going to see a more pronounced volatility. Well, it shows here that the tech sector is got a beta that's not too much higher than 1. which is surprising. On the surface, you would think of tech as being very volatile, and in certain segments it is. Uh, but because of their high ROI, return on investment, and of course their productivity, the innovation has been a bit more opportunistic and maybe even defensive than normally what one would think. This is a slide that speaks about earnings growth and the haves and have-nots. And in 2020, we certainly saw that dichotomy between high growth companies with high earnings and how they've done versus sort of the companies with less growth. And we need to sort of look at that and be mindful of that opportunity. Again, not forgetting our lens of fundamental research, fundamental valuation work. Yeah, of course, we are always going to be, we'll have the ability to go out a little bit and say, well, listen, this particular company has a higher growth addressable market or opportunity, so therefore they should have a more expensive valuation. The question is, how much more, right? We don't want to overpay. We want to buy it right. And oftentimes that means to be patient, right? We have to wait for our opportunity. As you know, markets have seemingly gone straight up in the latter half of 2020, and one thinks that might be a bit of a bubble, and therefore one has to be careful in allocating capital at these levels. However, understanding the underpinnings of a growth trajectory like the fourth industrial revolution will provide us with a shopping list, right? A list of companies that we could then look at when prices come down, and maybe quick, right? We have to be careful. And that's why active management rather than passive makes a lot of sense in these kinds of areas. So the themes that we're focused on: data analytics, cybersecurity, genomics and personalized medicine. We mentioned the robotic warehousing, AI, right? Using connectivity to make decisions, and of course, connectivity itself. These are all very interesting, and I implore you to reach out and discuss this with us and go over a list of opportunities and how it might fit into your profile as an investor, how it might fit into your portfolio, looking for whatever growth you might be needing in your portfolio. So we're happy to unpack this in great detail, share with you our thinking on the individual companies that might be appropriate for this type of theme. And we welcome those questions, and we welcome the debate and discussing it with you in great detail. Wishing you a happy and healthy holiday season. Thanks very much for listening, and look forward to chatting with you soon. Thanks again.